It's really great to be here. Thanks, Mike. We've had a phenomenal collaboration with LinkedIn. This is the first time we're producing some thought leadership. I think we've got some great insights around what's happening in the market and looking forward to sharing at least a sneak preview of what we've done. So as Mike mentioned, some background. My name is Bill Sullivan. I head up our global thought leadership at Capgemini. You may have seen some of our other work around our World Retail Banking Report, our World Wealth Report, our World Payments Report. I think this report's a little bit different in terms of how we've approached this and the overall initiative. So in terms of, before I get into some of the details, I think we've all seen the media hype. We've all heard everyone talking about the fintech hype. And I think we've gone through a couple phases of that fintech hype. The first phase was incumbents were ignoring them. You know, it's irrelevant, they're small, the barriers to entry are too high, the regulatory issues are too high. It's just not going to happen. We're going to ignore them. It's going to go away. And then we went to that second phase, which was the heavy levels of disruption, and the industry is going to be fundamentally changed, and X% of revenues are disappearing in the next few years. I think we're starting to shift away from that one as well and start thinking about pragmatically of what does this really mean? Can these fintechs achieve the scale and the distribution? Can the incumbents be able to move at the same pace and the speed that some of these fintechs can? I think we're starting to see some of that collaboration and partnership happening. And so our goal with this research was to cut through a lot of the noise, cut through the hype, and understand what's happening, what are customers looking for their financial services needs, and what are incumbents doing? What's happening? How are you driving your innovation agenda? What are some of the lessons learned and the success stories? And that's where we're really trying to drive through the research today. So the overall, we certainly are producing our World FinTech Report. It's launching tomorrow. You can dive into the details of it. But we wanted to try to drive a longer conversation with the industry. So we've added a couple additional initiatives. Hopefully some of you have seen our Agents of Change. You've seen a lot of the posters up. We've done about a dozen of these so far, where they're 4 to 5 minute videos, where we've got senior leaders in the industry, both from incumbents, from fintechs, from thought leaders, sharing their perspectives on some of the trends that we saw. And we're going to continue that dialogue. So we've rolled out those over the last couple of months. We've got more coming over the few months following. Next one was around our executive roundtables. I think any critical, when you're doing thought leadership, you have to have primary research and you need to get on the ground materials. So we interviewed about 8,000 customers across 15 countries. We ran over 100 executive interviews across the globe, in Europe, in the Americas, in Asia Pac. And we also ran a series of executive roundtables across the globe as well, where we brought fintechs together, we brought banks, insurers, as well as thought leaders to talk about a lot of the themes that I'm going to be going over today. And then, of course, we're culminating in today's event, which we're excited to be able to have not only the findings of the report, mine's probably the small piece, but all these panel sessions that we've got coming up, the one we just had, which was fantastic, and then a couple more coming. So really looking forward to sharing some of these findings. So these are some of the Agents of Change videos we've rolled. You can, if you go into the app, you can find those videos there. If you go on LinkedIn or Capgemini's YouTube pages, you'll be able to find those Agents of Change. So I'm not going to be able to share all the findings of this year's report. It's a pretty extensive report, lots of details at country level and regional level. But there's 3 key themes that I'm going to focus on today. The first one is fintech is clearly gaining traction in the industry, but there's a long way to go. We're still in those early stages of what fintech means and what that impact's going to be. So that's going to be the first message that I cover today. I'm sure many of you have seen this, the global fintech financing activity. Over the last 2 years, we've seen just a huge acceleration of growth. Certainly in 2016, that growth has started to decelerate, but we are still seeing some significant investments. And I think when we think about what's driven fintech and what are those drivers, there's a couple that come to mind. So the first one is customer expectations and demand. If you think about what customers are interacting with in their day-to-day lives, whether it be Google, Amazon, Apple, Facebook, that's setting the bar higher. They're expecting to be able to interact with their financial services institutions in that same way that they're interacting in their day-to-day lives. So I think that's the first one. The second one is the barriers to entry are just declining. When you think about the impact that cloud and what that's playing, when you think about the role that APIs can play, it's just a lot easier for smaller firms to be able to come in and not take over the entire banking industry or the entire insurance industry, but they can narrow in on specific pieces of the value chain and do those really, really well. And I think that leaves the real reason why fintech's growing is because the industry left gaps and openings for them. If the industry was able to meet all these customer expectations and demands, then it wouldn't have been as easy for some of these fintechs to come in and deliver those differentiated value experiences. So I think that's some of the key factors that we're seeing for that. Now, the first stat we have here is we asked customers across the globe, how many of you are using at least one fintech provider today? And probably not surprising, for those of you who follow Asia, China and India landed the highest. We saw 85% of customers in China are using at least one non-traditional firm for their financial services needs. And I think if you know that area, if you look at Ant Financial in terms of where they are with Alibaba, that's one of the reasons where, if you look at kind of a big tech player in China, they have some advantages that some of the fintechs don't have here. So fintechs here struggle with distribution, they struggle with customer base, they struggle with trust. In China, and you look at an Ant Financial, they're embedded within the customer experience already. They have the trust, they have the scale, they have the customers, and they've been able to very quickly move into the financial services sector. So I think when we think about some of the big tech versus fintech, that's some of the reasons why you're seeing that in Asia. And then similarly, when you think about India, the unbanked and the underbanked are largely leveraging some of these fintech capabilities. That's why we see some of those adoption rates a bit higher in those markets. Now, we also dove into demographic differences, and probably not surprising, younger demographics are more likely to test out fintechs. Tech savvy are more likely to. So we did find that older generations who consider themselves more tech savvy and are engaging electronically more often are more likely to engage with fintechs. And similarly, we saw higher numbers with affluent customers. So the more affluent customers were much more likely to be engaging with fintechs and were more comfortable trying to tap into some of those fintech capabilities. Now, I think what we're seeing is not many of these fintechs are taking massive market share, but what they are is they're starting to set the bar higher for incumbents in terms of setting the bar in terms of what customers are looking for from all of their financial services firms. Now, the second area we got into was trying to understand the trust level. And I think most of us here would acknowledge that, or many of us would acknowledge that traditional firms typically would have that advantage on trust versus the non-traditionals. And we did see about a 14% or a 13% difference between customers' trust in traditional firms versus non-traditional firms. But what you'll notice there is those numbers are still really low. I mean, we're down at almost a third of customers have that high levels of trust with their existing institutions. What we then started to look at was, well, what happens if customers are having a positive experience? When we looked at only customers having positive experiences, that trust advantage that the incumbents had actually flipped, and the non-traditional players actually had higher levels of trust. So while it may take a while to earn that trust in that respect of your non-traditional players, we did find that once you actually had that positive experience, once you were interacting with a non-traditional player and were comfortable with them, that trust level ended up being higher for the non-traditional, your fintech, as opposed to your traditional player. Now, the next area that we looked into was around customer value perception. So we tried to understand from customers, what do you think incumbents or traditional players have advantages in, and where do fintechs have advantage? And probably not surprising, on the upper left-hand corner, the top priority in terms of where they felt non-traditional or where traditional players had the advantage is around security and fraud. Second was around quality of service. Probably thinking about the human element. So the branches, the call centers, they felt like that quality of service was a bit higher in an advantage for traditional players. And transparency was actually on the traditional player as well. When we look at the non-traditional, your fintechs, better money, so price for money, timely, efficient, quicker service, those are both seen as advantages for fintechs. Now, what's interesting is we did our World Retail Banking Report earlier this year, where the research was done in Q4 of last year and Q1, and we found that convenience and user experience were noted by customers as advantages for fintechs and non-traditional. And in just 6 to 9 months later, we've actually seen those categories shift from the non-traditional advantage to the neutral. So we are actually starting to see some of those investments being made by incumbents, actually driving some impact around convenience as well as around user experience. So I think that was one of the findings that was surprising for us that we weren't necessarily expecting, especially in such a quick turnaround time compared to the research from earlier this year. Now, when we think about the next area that we looked at, and there's a lot of data on our moments of truth, so there's only so much I can share today. The overarching message that we heard was on those key moments of truth, and we looked at that for general categories. We did it for banking, insurance, payments, and investment management. Generally speaking, for the top 3 moments of truth for each of those domains, the overall levels of positive experience were quite low, and they were low for traditional firms as well as for non-traditional firms. And this is one of the findings. We were expecting the non-traditional to have slightly higher positive customer experience levels, but the reality is, generally speaking, those levels weren't very high. And I think one of the factors that may drive to that is some of those really cutting-edge customer experiences that you're getting from these non-traditional players, they're not gaining significant market share right now. So it may be that some of these non-traditional players that customers are working with right now aren't actually delivering differentiated experience. And maybe there are a handful that are doing a really good job, but generally speaking, customer experience levels still aren't quite being met. And the only area that we see here where we saw positive experience levels on the high side for traditional and non-traditional was on transferring money digitally. And that was pretty much equal between traditional and non-traditional firms. So I think the key message here is, certainly there's a lot of investment happening in the front office, but they're still not really getting to those customer needs in terms of what they're looking for. So there's huge opportunities both within traditional firms as well as with fintechs. So that covers the first point. The second point is, let's shift our thoughts to incumbents and firms and executives use. So we interviewed over 100 executives across the globe, and the general message is we're seeing a lot more pickup in activity around how do you address the threat or the topic of fintech. And we're seeing a lot of activity taking place, although mixed results coming out of that. So the first one we asked was around executives' view of fintech. So how do you view fintechs? And overwhelmingly, I think we've seen that shift from a year ago or 2 years ago, where it was, we view fintechs as a threat. We're not sure what the threat is, we're not sure what the impact's going to be, but it's a threat and it's going to impact our business. That's really flipped. That's moved into that next stage of, we see them as a partnership opportunity. We see them as the ability to be kind of an R&D for us. We have the ability to leverage their innovation, leverage their agility, leverage their speed. I think that's kind of the one thing in terms of where they're viewing it. The second one is they're absolutely setting the bar higher. So they have the ability to deliver some really great cutting-edge customer experiences, quick experiences, convenient, personalized, contextualized, and that's setting the bar higher for the entire industry. We also saw pretty high levels of them stating that fintechs are good acquisition targets and where they may be looking to acquire. Although when we get into the findings a little bit later, not many firms are actually acquiring, and there's probably a number of reasons in terms of where that is, but it is really one of the lower strategies that firms are taking in terms of how you address fintechs. So this slide moves from, the last one was around what their views are, the second one is around how active are they in terms of what they're doing? And again, we see 60% of executives already are partnering and collaborating with fintechs. And I think that's a big shift compared to where we were 6, 9, 12, 18 months ago. And I think we're going to continue to see that evolving. At the same time, it doesn't mean they're not building things in-house. So there's still a combination of massive investments going on in in-house development as well as in partnership. And the reality is, if you look at some of these areas, it's pretty well spread. There's almost been a bit of a throw the spaghetti on the wall approach and see what's going to work and where we can get some value. And I think when we see some of the findings around the effectiveness of some of these initiatives, we'll see that a lot of those are starting to fall short. So I think there's still some opportunities to, yes, we need to focus on it. Yes, we need to understand there's some value they've done. But how do you actually really apply innovation and deliver value and get the maximum value out of your efforts? So the next question we asked was around their executive comfort in terms of the strategies that they have in place. So you can see here, almost about 50% of the executives we spoke with feel like they've got a pretty good strategy in place in terms of how they're going to address fintech and innovation and moving forward. Only about 13% said that they had low confidence in their strategy. And yet when we ask them, how effective have you been at achieving results from applying innovation, only 10% say they've been very effective in those roles. And I think that's the general theme in almost all the interviews that we had is, we're doing the right things, we think we're moving in the right direction, but we really haven't figured out what that optimal model is in terms of how we get the most out of those investments, and how do we balance creating something through a fintech organization that's separated from the business so you can have the ability to be agile and innovative and move quickly, but not being so disconnected from the business that you are actually solving these cool tools without an actual business problem at hand. And on the flip side, when you're building all of this in-house and you're closely linked to the business, is that handcuffing you from being able to actually be agile enough, be able to move quick enough, get to market fast enough? So I think finding the balance between those, finding the balance between in-house versus partnership, and understanding there's some cultural differences also when you start thinking about how you're bringing incumbents with fintechs together. So that's the end of the second message. The third message is, We always talk about the challenges that incumbents have around legacy technology, and the legacy technology is holding everyone back. And I think no one's going to argue that that's not a big challenge. But when we asked executives what their top challenge was in applying innovation and driving that innovation agenda, it actually wasn't technology. They said it was leadership support, leadership buy-in, and how do you drive a culture of change throughout your entire organization. I think that was one of the key messages that we heard from the executives is there's an acknowledgement that there's a people challenge here and there's a leadership challenge. And while technology is a huge challenge as well, you need to start with the people from the top. I think that's one of the next key messages. So within Capgemini, we have our Applied Innovation Exchange framework, and the way we apply innovation is through 4 steps. The first one is discover. So how do you facilitate the discovery of emerging technologies and apply those to sector issues, business issues, and how they're going to impact your organization? So discovering what the real problem is that you're trying to solve for. The second one is how do you actually devise that? So do you co-locate with fintechs and incumbents? How do you shape insights and ideas and thoughts into actual business models, into prototypes, into technical architectures? How do you devise that into an actionable step? And then next is the deployment. So thinking about from a leadership perspective, thinking about from a culture perspective, how do you gain executive alignment, and how do you do that, and how do you execute at scale and at speed? And then lastly, from a sustained perspective, it's not just about deploying it, but how do you sustain it, how do you constantly innovate, how do you constantly improve and evolve that? So this was some of the messages I mentioned before around the key success factors for applying innovation. And almost 2/3 of the executives we spoke with did note that the executive leadership support and the buy-in is critical. And I think if you look at a lot of the organizations that are starting to have success out there to date, I think they're living by that, and they're really applying that within themselves from a leadership perspective, but also across their organization. I think you're also starting to see a talent perspective as well. You're starting to see organizations acquire talent from the fintechs, from the big techs, to be able to infuse the organization with that mindset and that cultural change, to be able to help think about moving from that more dinosaur approach into a more agile approach. And so I think those are kind of the key areas from, I think, so it is really around executive leadership support, cultural mindset, and shift. And then lastly, around thinking about collaboration, when you're thinking about how fintechs and incumbents can work together. Again, there's leadership elements, there's a culture element, but there's also how can you create that sandbox environment where you can work together and be agile? How can you be open to not just outside industries in terms of where we are, but also globally? There's a lot of innovation taking place outside of the US. If you're looking in some of the emerging markets, you look in Europe, there's a lot happening to date that I think in the US we tend to be very pigeonholed into what's happening. So I think being able to look outside of your local markets for some of those innovations is going to be critical. So in terms of closing thoughts, the first one is fintech's clearly gaining momentum. It is impacting the industry. It's not taking over the industry and destroying the industry, but it is evolving it. The second one is emerging markets, Gen Y, early adopters, affluent are really the early adopters of fintech, and they're the ones who are driving some of that change, which are going to be setting the expectations and the bar for existing incumbents. Third one is we've seen an explosion of activity. Everyone's doing something about fintech. The key now is how do you decipher through the noise and how do you focus your organizations in those key areas that are going to deliver the maximum results. I think we're still in that early stage. In most of the interviews that we had, with a few exceptions, most executives say we're still working on that formula. We're still trying to find that balance of innovation versus keep the lights on, incremental improvements and change versus disruptive fundamental shifts in terms of business models. I think we're finding that balance still, and that's probably still going to happen for the next couple of years. I think, as I mentioned before, the innovation to date mostly is around that incremental change as opposed to the transformational change. I think if you start thinking about, we try to avoid getting into some of the bigger bang ones. So what's the impact of blockchain? What's the impact of APIs? What's the impact of open banking or platformification? There are some big movements coming down the pipeline that could actually fundamentally shift us from a more incremental change to a disruptive change. And I'm sure we'll hear some of those conversations with some of the panelists later on today. And then firms can benefit from that systematic approach and really putting a process in place. And then, as I mentioned before, the bigger disruption around blockchain, big tech platformification, all of that I think is exciting stuff that we'll certainly probably be covering in the near future. So I wanted to thank, LinkedIn has been a phenomenal partnership. It's been a great, intense 6 months. We're looking forward to running a number of executive roundtables post-launch. So if anyone's interested in joining us for those, please let us know. Keep your eyes open for future Agents of Change videos that are coming out. And also, we've been partnering with FMA for the last, over the last decade. So we've been working on our World Retail Banking Report with them for 13 years. So it's great that you have a chance to meet Vincent today. He'll be able to give an introduction to who FMA is and what their role is and how they're trying to evolve the banking industry in general, coming out of Europe, but certainly trying to make it more global. So thank you.